Gold and silver have always been valuable. People have desired these metals for thousands of years. Their beauty and rarity make them special. We see their importance throughout history. Ancient civilizations used gold and silver as money. They also used them to make beautiful art and jewelry. Today, these metals still hold value. They're a way to protect our wealth. Gold and silver are tangible assets. This means you can hold them in your hand. They are not like stocks or bonds. These assets are different from paper money. Paper money can lose value. This happens when prices increase. But gold and silver tend to hold their value over time. This makes them a good investment for the future. Investing in precious metals is a way to diversify your portfolio. Diversification means not putting all your eggs in one basket. You spread your risk across different assets. This can protect you from losses. When one investment goes down, another may go up. Adding gold and silver to your portfolio can help you manage risk. These metals have a proven track record. They have been a store of value for centuries. This makes them a reliable choice for investors. When times are uncertain, people turn to gold and silver. They provide a sense of security. This is why many investors consider them a safe haven asset. In an ever-changing world, it's important to protect your wealth. Inflation, economic crises, and market volatility are all threats. These events can erode your savings and investments. Precious metals offer a way to safeguard your future. They act as a hedge against these risks. Gold and silver prices often rise when traditional markets fall. This makes them a good investment during periods of uncertainty. They can help you preserve your purchasing power. When inflation is high, the prices of goods and services increase. This means your money buys less. Gold and silver have historically held their value during these periods. This makes them an attractive option for investors seeking stability. They provide a level of confidence when other assets are fluctuating. This is why they are considered a safe haven. Gold's story is intertwined with the history of civilization. From the ancient Egyptians to the Roman Empire, gold has captivated humanity. Its warm glow and rarity made it a symbol of power and wealth. Rulers adorned themselves in gold. They used it to mint coins. This practice showcased their wealth and influence. The Egyptians believed gold had spiritual significance. They buried their pharaohs with gold treasures. These treasures were meant to accompany them into the afterlife. The discovery of Tutankhamun's tomb in the 20th century is a testament to this belief. The sheer amount of gold found in the tomb astonished the world. Throughout the Middle Ages, gold continued to be highly prized. Alchemists sought the philosopher's stone. This mythical substance was believed to be able to turn base metals into gold. While they never succeeded, their quest highlights gold's enduring allure. It was a time of great scientific and intellectual exploration. The discovery of the New World in the 15th century led to a gold rush. Silver, like gold, has played a crucial role in human history. It has been used as a form of currency for millennia. Silver coins were a common medium of exchange in ancient civilizations. They were more readily available than gold, making them suitable for everyday transactions. The Romans used silver to produce the denarius. This silver coin was the backbone of their economy for centuries. It facilitated trade and commerce throughout the vast Roman Empire. The stability of the denarius contributed to Rome's prosperity during this era. In the 16th century, the discovery of massive silver deposits in the Americas, particularly in Potosi, Bolivia, had a significant impact on the global economy. This influx of silver from the New World led to a period of inflation, but it also facilitated trade between Europe, Asia, and the Americas. Silver also played a vital role in the development of photography in the 19th century. Silver nitrate's sensitivity to light made it an essential component of early photographic plates. This use of silver showcases its versatility beyond its monetary value. It highlights its importance in technological advancements. Inflation is a silent thief. It erodes the value of your savings over time. What you could buy with $1 today might cost more tomorrow. This is a reality of modern economics. Precious metals, particularly gold, have historically acted as a hedge against inflation. When inflation rises, the purchasing power of paper money declines. This means you need more dollars to buy the same amount of goods or services. Gold, however, tends to hold its value. In some cases, its price even increases during periods of high inflation. This makes it an attractive option for investors seeking to preserve their wealth. This inverse relationship between gold and the purchasing power of paper money is a key reason why investors turn to precious metals. They see gold as a store of value. This means it retains its worth over time, even when other assets are losing ground. This characteristic has been observed for centuries, reinforcing gold's status as a safe haven asset. The idea of a safe haven is central to understanding the appeal of precious metals. Investors view gold as a haven during economic storms. When markets are turbulent and uncertainty prevails, gold offers a sense of security. This is because its value is not directly tied to the performance of stocks, bonds, or other traditional assets. Economic uncertainties are a fact of life. Markets fluctuate, recessions occur, geopolitical events unfold. These events can impact your investments and erode your wealth. Precious metals can act as a buffer during these turbulent times. Gold is often referred to as a crisis commodity. This is because its price tends to rise when investors are fearful. During times of economic crisis or political instability, investors often flock to gold as a safe haven. They perceive it as a store of value that is less susceptible to the forces impacting other assets. Silver, while more volatile than gold, also exhibits safe haven characteristics. It often moves in tandem with gold during periods of market stress. This means that its price also tends to increase when investors are seeking safety and stability. This correlation between gold and silver reinforces their appeal as hedges against uncertainty. It's important to note that precious metals are not a guaranteed investment. Their prices can fluctuate, and there is no guarantee of profit. However, their historical performance and their role as safe haven assets make them a valuable addition to a well-diversified portfolio. They can help mitigate risk and provide a level of stability during times of market turmoil. Diversification is a fundamental principle of investing. It means not putting all your eggs in one basket. Instead, you spread your investments across different asset classes, such as stocks, bonds, real estate, and precious metals. This strategy helps mitigate risk. Adding precious metals to your portfolio can enhance diversification. Gold and silver have a low correlation with other asset classes. This means that their price movements are not closely tied to the performance of stocks, bonds, or real estate. As a result, they can provide a counterbalance to your portfolio. When stocks are performing poorly, gold and silver may hold their value or even increase in price. This can help offset losses in other areas of your portfolio, potentially reducing the overall volatility of your investments. A well-diversified portfolio aims to achieve a balance between risk and return. The percentage of your portfolio allocated to precious metals will depend on your individual circumstances, risk tolerance, and investment goals. It's essential to consult with a financial advisor to determine the appropriate allocation for your specific situation. They can provide personalized guidance based on your financial objectives. Section 4. The prudent path. Investing in precious metals is not about getting rich quickly. It's a long-term strategy focused on wealth preservation and mitigating risk. It's about safeguarding your assets against the erosive forces of inflation and economic uncertainty. This approach requires patience and a focus on the long view. Before investing in precious metals, it's crucial to conduct thorough research. Understand the different investment options available, such as physical bullion, coins, exchange-traded funds, ETFs, and mining stocks. Each option has its own set of risks and rewards. Informed decision-making is paramount. Consider your investment goals and risk tolerance. If you're seeking a highly liquid investment, ETFs might be a suitable choice. If you prefer tangible assets, physical bullion or coins might be more appealing. Mining stocks offer leveraged exposure to precious metals, but come with higher volatility. Remember, investing in precious metals is not a guaranteed path to riches. However, it can be a prudent strategy for those seeking to preserve their wealth, hedge against inflation, and add an element of stability to their portfolios. As with any investment, it's essential to proceed with caution, conduct thorough research, and seek professional advice when needed. Section 1. Holding history in your hands. One way to invest in precious metals is to buy them directly. This means purchasing physical gold and silver. You can buy bars, coins, or even jewelry. Owning physical metal is tangible. You can hold it. You can see it. This provides a sense of security for some investors. However, there are some things to consider before buying physical metals. Storage is an important issue. Gold and silver are heavy and valuable. You need a safe place to keep them. A home safe is an option for smaller amounts. For larger investments, you might consider a bank-safe deposit box or a private vaulting service. Another factor to consider is insurance. You'll want to insure your precious metals against loss, theft, or damage. This will provide financial protection in case something happens to your investment. Make sure your insurance policy covers the full value of your holdings. Buying physical gold and silver can be a good option for some investors. It offers tangible ownership and can provide peace of mind. However, it's crucial to factor in the costs of storage and insurance. Weigh these costs against the benefits before making a decision. Section 2. Golden Years, IRAs, and Metals. You can invest in precious metals using a self-directed IRA. IRA stands for Individual Retirement Account. It's a tax-advantaged account designed for retirement savings. A self-directed IRA allows you to invest in a wider range of assets, including physical gold and silver. There are specific rules for holding precious metals in an IRA. The IRS has strict requirements regarding the type and purity of metals allowed. For example, gold must be at least 99.5% pure to qualify. Make sure you understand these rules before investing. You will need to use a custodian to hold your precious metals in an IRA. A custodian is a financial institution that holds and manages the assets within your IRA. They ensure that your investments comply with IRS regulations. Choose a reputable and experienced custodian. Investing in precious metals through an IRA can be a tax-efficient way to diversify your retirement portfolio. However, it's essential to follow IRS guidelines and work with a qualified custodian. Consult with a financial advisor to determine if a self-directed IRA is right for you. Welcome to Section 3, ETFs, your gateway to precious metals. ETFs offer another way to invest in precious metals. ETF stands for Exchange Traded Fund, a type of investment fund that trades on stock exchanges, much like individual stocks. They offer a convenient and liquid way to gain exposure to precious metals. Take gold ETFs, for instance, which track the price of gold. When you buy shares of a gold ETF, you are not buying physical gold. Instead, you are buying shares of a fund that holds gold bullion. The ETF's price fluctuates throughout the trading day, reflecting the current market price of gold. Silver ETFs work similarly, tracking the price of silver. These ETFs offer investors a way to participate in the silver market without the hassles of owning physical silver. They are a popular choice for investors seeking exposure to the price movements of silver. ETFs are a flexible and accessible option for precious metals investors. They offer diversification, liquidity, and ease of trading. However, it's essential to research different ETFs and their expense ratios before investing. Moving on to Section 4, Mining for Growth Stocks and Their Potential. Investing in mining stocks is another way to gain exposure to precious metals. Mining companies are the businesses that extract gold, silver, and other metals from the ground. When metal prices rise, mining companies often see their profits increase. Investing in mining stocks can offer the potential for significant returns. However, it's crucial to understand that mining stocks are more volatile than investing in physical metals or ETFs. The stock price of a mining company is influenced not only by the price of the metal it produces, but also by factors such as production costs, which can fluctuate and impact profitability, geopolitical risks, where mining operations can be affected by political instability, regulatory changes, or environmental concerns, and management quality, as the success of a mining company depends on the experience and competence of its management team. Investing in mining stocks requires careful consideration and research. It's essential to diversify your holdings and choose companies with a proven track record of profitability and responsible mining practices. Now let's dive into Section 1, Gold versus Silver, weighing the options. Gold and silver are both precious metals with a long history of value. However, They have different characteristics that make them suitable for different types of investors. Understanding these differences is crucial when deciding which metal is right for you. Gold is often seen as the more stable investment. It's less volatile than silver, meaning its price tends to fluctuate less dramatically. This stability makes gold a popular choice for investors seeking to preserve capital during times of uncertainty. Silver, on the other hand, is more volatile. Its price can move more sharply both up and down. This volatility makes silver a potential choice for investors seeking higher returns. However, it also comes with greater risk. The decision of whether to invest in gold or silver depends on your individual circumstances, risk tolerance, and investment goals. If you're risk-averse and prioritize capital preservation, gold might be a better fit. If you're comfortable with higher risk and seek potentially higher returns, silver could be an option. It's important to remember that there is no right or wrong answer. The best approach is to carefully consider your own needs and circumstances before making a decision. Diversifying your precious metals holdings by investing in both gold and silver is also a viable strategy. Section 2. Striking the right balance. Allocation strategies. Determining how much of your portfolio to allocate to precious metals is a crucial decision. The right allocation will vary depending on your individual circumstances, risk tolerance, and investment goals. There is no one-size-fits-all answer. A common rule of thumb is to allocate between 5% to 10% of your portfolio to precious metals. This allocation is often seen as a prudent way to add diversification and potential downside protection. However, some investors may choose to allocate more or less depending on their specific circumstances. For example, investors who are particularly concerned about inflation or economic uncertainty might choose to allocate a larger portion of their portfolio to precious metals. On the other hand, investors with a longer time horizon and a higher risk tolerance might choose to allocate a smaller portion. It's important to remember that asset allocation is not a one-time event. It's an ongoing process that requires regular review and adjustment as your circumstances change. As you approach retirement, for example, you might choose to reduce your allocation to riskier assets, such as precious metals, and increase your allocation to more conservative investments. Section 3. Navigating the risks, a prudent approach. While precious metals offer a range of potential benefits, it's crucial to be aware of the risks involved. Like any investment, precious metals prices can fluctuate, and there is no guarantee of profit. Understanding these risks can help you make more informed investment decisions. One risk to consider is price volatility. Precious metals prices can be influenced by a variety of factors, including economic conditions, geopolitical events, and supply and demand dynamics. These factors can cause prices to move rapidly and unpredictably, leading to potential losses. Another risk is storage and security. If you choose to invest in physical precious metals, you'll need to find a safe and secure place to store them. This might involve purchasing a home safe, renting a safe deposit box, or using a professional storage service. These options can come with additional costs. Counterparty risk is another factor to consider, particularly when investing in precious metals through ETFs or other financial instruments. Counterparty risk refers to the risk that the other party involved in a transaction might not fulfill their obligations. Despite these risks, precious metals can be a valuable addition to a well-diversified portfolio. By carefully considering the risks involved and taking steps to mitigate them, you can increase your chances of success in the precious metals market. Section 4. Informed investing, your path to prosperity. Investing in precious metals can be a rewarding experience, but it's essential to approach it with knowledge and prudence. By taking the time to educate yourself about the market, you can make informed decisions that align with your financial goals. One crucial step is to conduct thorough research. Learn about the different types of precious metals, the factors that influence their prices, and the various ways to invest in them. Understanding the market dynamics can help you identify opportunities and manage risks effectively. Another important step is to define your investment goals and risk tolerance. What are you hoping to achieve by investing in precious metals? Are you seeking long-term growth, capital preservation, or a hedge against inflation? Your investment goals will influence your investment strategy. Seeking professional advice is also a wise decision, especially if you're new to precious metals investing. A qualified financial advisor can provide personalized guidance based on your individual circumstances, helping you develop a tailored investment plan. Remember that investing in precious metals is a journey, not a sprint. By staying informed, managing your risks, and seeking expert advice when needed, you can navigate the market with confidence and work towards achieving your financial aspirations. Section 1. The enduring value of precious metals. Investing in gold and silver is a tradition that has stood the test of time. Throughout history, these metals have held value. They represent security in uncertain times. Today, these principles still hold true. Gold and silver can be a valuable part of a balanced portfolio. Gold and silver offer diversification. They are a hedge against inflation. They act as a safe haven during economic turmoil. These factors make them attractive to investors. These metals provide a level of stability. They can help protect your wealth. Adding gold and silver to your portfolio is a way to diversify your holdings. Remember, diversification is key to managing risk. It's like a safety net for your investments. When one asset class goes down, another may go up. Precious metals can cushion the blow during market downturns. Investing in precious metals is a personal decision. It's essential to do your research. Understand the risks and rewards. Consider your investment goals. If you're looking for a way to preserve your wealth, gold and silver are worth considering. Section 2. Secure your financial future. As you consider your investment options, remember the lessons of history. Gold and silver have weathered countless economic storms. They have provided a source of stability for investors throughout the ages. In today's uncertain world, they remain a beacon of security. Whether you're a seasoned investor or just starting, explore the potential of precious metals. Talk to a financial advisor. Learn about the different ways to invest. Find the approach that aligns with your goals. Take control of your financial future. Remember, investing is a marathon, not a sprint. It's about making smart choices today to secure your tomorrow. Gold and silver can be a part of that journey. Let their enduring value guide you toward a brighter financial future. Start building your golden legacy today.